Mastering the SAPSD Pricing Procedure, VR08. 1. Introduction, the Orchestrator of Value. In the SAP Sales and Distribution SD module, the condition technique is the database, but the pricing procedure, or calculation schema, is the processor. If condition records are the fuel, the pricing procedure is the engine. A common misconception among mid-level consultants is viewing the pricing procedure as merely a list of condition types. An expert views the pricing procedure as a sequential logic script. It is a rigid framework that dictates not just prices, but the accounting interface, the statistical updates, the tax compliance logic, and the behavior of the sales document itself. To truly master the pricing procedure, one must understand it not as a static table, but as a dynamic interaction between configuration, T683 tables, and the ABAP pricing engine, function group 561A. 2. The control data structure. As requested, here are the 16 control fields of the pricing procedure in a single line: step, counter, condition type, description, from, to, manual, required, statistical, print, subtotal, requirement, cal type, BAS type, account key, accruals. 3. The architectural engine room. To be an expert, you must understand what happens in the background when SAP reads the pricing procedure. The pricing communication structure, KOMK and KOMP. The pricing procedure does not function in a vacuum. It relies on data being passed from the sales order, tables VBAK or VBAP, into the pricing communication structures, TKOMK, header data. Contains customer info, sales area, and header dates. TKOMP, item data. Contains material, quantity, weight, and plant data. When you configure a pricing procedure, you are essentially mapping the data found in TKOMP and TKOMK against the rules defined in V or 08. The internal table XKOMV. While the user sees a grid in the sales order, the system sees the internal table XKOMV or KOMV in the database. Every row in your pricing procedure that is active generates a line in XKOMV. Expert insight: when you're debugging pricing, you are almost always analyzing XKOMV. Understanding that the step and counter in the procedure are the primary keys for this internal table is crucial for writing custom routines. 4. Advanced configuration. Beyond the basics. While we will not define the 16 fields, we will analyze the strategic application of these fields in complex business scenarios. A. Strategic use of step and counter. The gap strategy. Never number steps sequentially. 1, 2, 3. Always use increments of 10, 10, 20, 30. In a live production environment, months or years after go live. Inserting a new tax condition between step 10 and 11 is a nightmare if you didn't leave a gap. It requires transport dependency management and can corrupt historical pricing analysis if not handled via a new procedure version. The counter grouping. Use the counter to group logically identical conditions. Scenario. A client has 10 different types of freight based on different carriers. Condition types ZF01 to ZF10. Expert config. Assign all of them to step 50, but give them counters 1 through 10. Result. This forces them to share the same logic regarding from or to base calculations and makes the user interface cleaner. B. The from and to accumulation logic. The most powerful feature of the procedure is the ability to create temporary buckets of value without saving them to the database. Recursive accumulation. You can create a gross value step that sums steps 10 to 90. Later in the procedure, you can have a net value step that starts from the gross value step. The to-field danger. A common error occurs when using the to field with percentage conditions. Error step 50 is a 10% discount. You set from 10 and to 40. Result. The system sums the values of steps 10 through 40 and applies 10% to that sum. Risk. If step 30 was a statistical value, like cost VPRS, it is still included in the sum unless explicitly excluded via a routine. The from or to logic is blind to the statistical flag. It simply sums the values. You must use requirement routines to prevent unwanted additions. C. The statistical trap. Marking a condition as statistical, stat, creates a green line in the pricing screen. It allows the value to be seen but not added to the net value. Integration point. Statistical conditions are vital for LIS, Logistics Information System, and BW, Business Warehouse. Scenario. You want to track lost revenue due to discounts. You create a subtotal that sums up all discount lines. You mark this subtotal as statistical so it doesn't affect the price, but you map it to a LIS structure. This allows the CIO to run a report on total discounts given without having to parse every invoice line item. D. The print indicator nuance. This field controls the visibility of the pricing line on external forms, invoices, or confirmations. Values: X, item, S, total, A, total general. Expert tip. In modern SAPS or 4HANA projects using Adobe Forms or Smart Forms, this field is often ignored by developers who hard-code logic in the print program. However, as a functional expert, you must insist on using this field. It allows you to toggle the visibility of a condition, example, hiding a specific surcharge, without calling an ABAP developer to change the form code. 5. The subtotal field, the integration backbone. The subtotal field is the most critical integration point in the pricing procedure. It maps the value of a specific pricing step to a reserved field in the conf table, KZWI1 through KZWI6, and others. Why is this vital? The pricing procedure is self-contained. Other modules, credit management, Colorado PA, inventory, cannot read line 20 of your procedure. They can only read the standard fields in the KOMP table. The subtotal field bridges this gap. Key subtotal mappings. 1. Subtotal A, credit price. This determines the value passed to FSCM, Financial Supply Chain Management, or Classic Credit Management. Scenario. If you want to check credit based on the gross value rather than the net value, including taxes, you must assign subtotal A to the gross value line or the tax line in the procedure. If you miss this, credit exposure will be calculated incorrectly. 2. Subtotal 1 through 6, KZWI1, KZWI6. These are freestyle buckets, often used for rebate basis or commission calculation. Scenario. A salesperson gets a commission on the net price, but excluding packaging costs. You create a line in the procedure that calculates price, packaging. You assign this to subtotal 1, KZWI1. The commission module is then configured to read KZWI1 as the base. 3. Subtotal B, cost. This is reserved for the cost of goods, VPRS. It carries the cost value to the margin analysis. 4. Subtotal S, effective value. Used in reporting to determine the real value of an item after all hierarchy logic is applied. 6. The VOFM routines, requirement, calculation, base. This is where the functional consultant becomes a techno-functional expert. These 3 columns, requirement, caltype, bastype, call small ABAP subroutines defined in transaction VOFMA. Requirement, the gatekeeper. The requirement routine checks a condition and returns a sub-RC code. Logic. If SY sub-RC equals 0, the condition is displayed or active. If SY sub-RC equals 4, the condition is ignored. Standard routine 2, item with pricing. This is the most common. It checks if the item category is relevant for pricing. Without this, the system would try to price text items or free goods, causing errors. Standard routine 9, exclusion. Used for condition exclusion groups. It checks if a better price has already been found and suppresses the current line if so. Custom requirement, example, routine 901. Scenario, a client wants a pallet discount that only applies if the customer is in the retail industry and the order reason is trade show. Execution, you write a VOFM routine 901. Inside, you check KOMKK-VGR1, customer group, and KOMK AGRU, order reason. This avoids creating complex access sequences with too many key combinations. B. Alternative calculation type, the formula. This overrides the standard price quantity math. Routine 11, profit margin. This serves to calculate the profit, net value, cost. Routine 13, rounding. Essential for currencies with no decimals, like JPY, or specific rounding rules, Swiss rounding. It forces the calculated value to the nearest valid unit. Custom scenario. Problem. A client sells steel. The price is based on the London Metal Exchange, LME index, which changes hourly. Solution: you cannot maintain condition records every hour. Instead, you use an alt-calc type. The ABAP code in the routine calls an external API or a Z-table to fetch the live LME rate and multiplies it by the quantity. The condition record in VK11 is just a dummy placeholder. C. Alternative condition base value, the basis. This overrides the from field. It changes what the percentage is applied to. Routine 12, gross weight. Scenario: a freight surcharge is $5 per kg. The standard system might try to apply it per EA, each. Routine 12 forces the system to look at the gross weight field in the material master, KOMPW, as the multiplier. Routine 22, whole units. Scenario: you sell cable. Customers buy 5 meters. You only charge for full meters. Routine 22 truncates the decimal, passing 10 as the basis for pricing, effectively giving the 5 meters for free. 7. Pricing procedure determination. You can configure the most perfect pricing procedure in V or O8, but it is useless if the system doesn't know when to trigger it. The standard formula, OVKK, $sales area, org or dist, or div, plus customer pricing proc, plus document pricing proc, equals pricing procedure, $. 1. Sales area, the physical market scope. 2. Customer pricing procedure, CPP, a single character flag in the customer master, sales area data greater than sales tab. Expert usage, define 1 for standard customers, 2 for intercompany, 3 for government, tax-free. 3. Document pricing procedure, DPP, a single character flag in the sales document type config, VO-V8. Expert usage, define A for standard orders, C for returns, R for free of charge deliveries. The super determination user exits. Sometimes, the standard determination is not enough. Scenario: you use the same sales area and order type for both domestic and export sales, but you need radically different pricing procedures, different taxes, different Incoterms. Solution: you cannot use standard OVKK because the inputs are identical. You must use the user exit MV45AFZZ, form USEREXITPRICINGPREPARET Logic: in the ABAP code, you check the ship-to country. If it equals the plant country, you force the pricing procedure variable KALSM to ZDOMES. If they differ, you force it to ZEXPORT. 8. Account determination, the bridge to FI. The account key column in the pricing procedure is the handshake between SD and FI. The ERL versus ERS distinction. ERL, revenue, used for positive values, prices. ERS, sales deductions, used for negative values, discounts. MWS, tax, used for tax output. Account keys for accruals. The accruals column in the procedure works differently. It is used when money is not changing hands now, but will in the future. Example: rebates or freight paid to a third-party vendor. Mechanism: when an accrual key is present, SAP posts to 2 accounts. 1. Expense account, to record the cost immediately. 2. Provision account, a balance sheet liability account, waiting for the invoice from the carrier or the rebate claim from the customer. Troubleshooting account determination. If a user gets the error G or L account not found, an expert checks the procedure first. 1. Go to the procedure step. 2. Identify the account key, example, ERL. 3. Go to Transaction VKOA4. Check if there is a valid combination for that key, Chart of Accounts, and Sales Org 9. Condition exclusion groups. Expert pricing is not just about applying prices, it's about filtering them. The business problem. A customer is eligible for a summer promotion, $10 off, and a loyalty discount, 5% off. We only want to give them whichever one is better for the customer, not both. The procedure integration. You do not script this in the procedure using requirements. You use condition exclusion, OV31. 1. Define exclusion group, create group A. 2. Assign conditions, put the promo condition and loyalty condition into group A3. Map to procedure. In the pricing procedure configuration, you assign the exclusion procedure. 4. Select rule, best condition between condition types. When the pricing procedure runs, it calculates both. The exclusion logic then compares the values and deactivates the lower value, sets it to inactive state Y or Z in XKOMV. The pricing procedure sees the inactive flag and ignores the value in the net value calculation. 10. Performance tuning the pricing procedure. A bloated pricing procedure is the one cause of slow sales order creation, VA01. The database hit problem. Every step in the procedure that has a condition type and an access sequence forces the system to query the database tables, a 001, a 002, etc. If you have 100 steps and 50 have access sequences, that is 50 database queries every time you hit enter in a sales order. Optimization strategies. 1. Requirement 2 everywhere. Apply requirement 2. Item with pricing to every single step. This prevents the system from running the pricing logic for text items or irrelevant lines, saving processing cycles. 2. Manual flags. If a condition is rarely used, example, goodwill credit, mark it as manual in the procedure. This stops the system from searching the database for records that likely don't exist. 3. Pre-step requirements. Use custom requirements to check header fields before searching for item conditions. If the customer group is not retail, do not even bother searching for the retail discount condition. 11. Debugging the pricing procedure. A hands-on expert must know how to debug pricing when standard analysis fails. The analysis button. In the sales order pricing screen, the analysis button is your first line of defense. What it tells you, it lists every step in the procedure. Condition found, it shows the record. Condition missing, it tells you why, example, requirement 002 not fulfilled, or access sequence not found. Expert note. If the analysis says condition ignored, it usually means a requirement routine returned sy-s_rc equals 4. Hardcore debugging. Program RV61A761. When the analysis screen is vague, you must debug. 1. Go to SE38 or H2. Set a breakpoint in RV61A761, the main pricing driver. 3. Look for the loop at XKOMV. 4. Watch how the system loops through your procedure steps. 5. Check the value of sy-sub-rc after the perform KOBED statement. This indicates if the requirement routine passed or failed. 6. Check XKOMVKWERT to see the calculated value of the step. 12. Special scenarios and expert solutions. Scenario A. The free goods 100% discount. How do you handle a buy one get one free where the second item is priced but then fully discounted? The R100 condition. Use a dedicated discount condition type. Example. R100. The requirement. Use requirement 55. Free goods. This routine checks if the item category is TAN and free item. Positioning. Place this at the very end of the discounts block in the procedure to ensure it negates the full net value calculated so far. Scenario B. Tax jurisdiction codes. USA or Canada. In the US, tax is determined by jurisdiction code, state plus county plus city. The external interface, the pricing procedure, must connect to external tax software, Vertex, Sabrix, Taxware. The trigger, this is done via the condition type configuration, but the procedure must support it by having the correct base formula to pass the net value to the external API. The RFC call. The system triggers an RFC call during the tax step of the procedure, sends the ship to and ship from addresses, and receives back the tax rate and amount. The procedure simply acts as a container for this external result. Scenario C. Intercompany billing, IV. Pricing procedures for intercompany billing are unique because the price is actually the cost of the delivering plant plus a markup. PI01, intercompany price. This condition represents the price charged by the manufacturing plant to the sales organization. Reference. The intercompany procedure often references the details of the original customer order to ensure the material and quantities match, but the valuation is entirely different. Static value. Often, the intercompany price is a static transfer price. The procedure is usually much simpler. Price, PI01, plus tax equals net 13. Conclusion. The SAPSD pricing procedure is a masterpiece of logic configuration. It is not just a calculator, it is a policy enforcement engine. To be an expert, you must move beyond the what, configuring a table, to the why and how, architecture and optimization. You must understand 1. The flow of data from master data to the XKOMV structure. 2. The logic gates provided by requirement routines. 3. The integration hooks provided by subtotals and account keys. 4. The performance impact of your configuration choices.